We're going to see if Jerome Powell makes it to the end of his term without having to do another pivot. He indicated yesterday he's probably going to cut another 25 bips again, which suggests to me that they can see that things are in trouble in the economy and otherwise. And, with inflation at 2.9% headline and realistically a lot higher than that, everyone goes to the grocery store and we all know that we're not at 2.9%. So it's going to be very interesting to watch this unfold over the next, 6 months.
Lawrence Lepard, author of The Big Print, What Happened to America and How Sound Money Will Fix It. It is so wonderful to welcome you back to the show. Great to see you again, Larry. Really appreciate you taking the time, especially given everything happening in markets right now.
Thanks, Julia. It's really nice to be back with you. I enjoyed our last conversation. And as you point out, there's just so much going on right now. It's hard to keep up.
It is hard to keep up. And I loved our last conversation. That would have been over the summer. Yeah, so four months or so ago. The audience loved it. The comments were so kind and positive, which I always love. And I love bringing on someone new for this audience because you were a viewer request. And again, you're back at a viewer's request via X. So thrilled to have you back on. Let's just kind of start big picture where we always start. Where we are today, the framework in which you are looking at the world, markets. What do you make of what's transpired? Where do you see things headed? Because I got to say, we're seeing that thesis that you laid out in your book start to unfold.
Yeah, the book is kind of starting to look like it might be right, although they haven't formally started a big print. The market is sniffing it out. So I think the story since you and I last spoke is really that the precious metals have just caught fire. As part of what is actually being recognized by the mainstream now. They've even given a name to it. They've called it the monetary debasement trade. I think JP Morgan coined that, and then Mohammed El-Arian tweeted it. And of course, all the elites are acting like they've known about this for years and they've been in on it. And of course, they're late to the party because you and me, and you told me you bought your gold way back in the early 2000 period.
2011, yeah.
2011, yeah. But we've all been in this trade for a while. We've seen it coming for a while, and of course now, what's going on is the world's waking up. And as I actually say in my quarterly report, which will be out the next couple of days, the trick to investing is to understand what's going to happen and to get there first and then to have everybody else agree with you.
Mm-hmm.
And we've known that monetary debasement's a big issue here for a number of years. This is not something new to me. I wrote a book about it. But the world didn't really understand, I don't think, how important an issue it was until maybe sometime this summer. I think when it started, actually, it was in September. Gold had it had moved decisively, and I recall all the gold moves very clearly. It had moved decisively from 2,000 to 2,600 to 3,400, and then it kind of got stuck at 3,400 through the spring and summer, and then then late summer, early September, it broke out from that 3,400 range, and of course now it's 4,200, and it's just marched relentlessly. And probably even more importantly, silver was stuck down in the $35 range, and it's now at 52, and that's a new all-time high. The only other times it was above 50 or close to 50 were the Hunt Brothers episode in 2011, the last squeeze post GFC. So, the fact that the precious metals have woken up to the debasement, and I think that's what's really going on, it's a big deal. And Bitcoin actually is lagged to those two and hasn't moved nearly as much, but it's going to move further and harder when it starts, and that's coming soon, in my opinion. But, you can see this in a lot of different ways, Julia. There are all these little data points that I think led to the gold market, quote unquote, sniffing this out. Let's just examine a few of those data points. Percent says we're going to run the economy hot. DOGE kind of failed. The Federal Reserve governor resigns, and Stephen Moran, who was the author of the Mar-a-Lago Accord, is appointed. Moran says interest rates are too high, need to go down 200 basis points. Donald Trump says interest rates are too high, need to go down 300 basis points to 100. Trump attacks the Federal Reserve and calls Jerome Powell a moron, or calls him too slow. He fires a Federal Reserve governor claiming she cheated on her mortgage. It kind of looks like she did, but whether that's cause or not, who knows? That's in front of the Supreme Court right now. So, and then Powell's term ends in May, and that's a really big deal, right? Powell has pretended he's going to be Volcker, wants to be Volcker, and keep inflation under control, although he really hasn't done the job since we're still at a 2.9% CPI, and actually it's higher than that, but that's what they report. Of course, they lie about the numbers, and he pivoted in the last Fed meeting. He took rates down 25 basis points. Moran wanted to take them down 50. And so I think what the market is smelling or sniffing out is that in May, Powell's term ends. So he'll be gone with certainty, and Trump will appoint somebody new. And I think we can be, there's a very, very high level of certainty that that new person will be somebody who is very monetarily accommodative, and we're going to see much lower interest rates. And frankly, we kind of have to, because the interest on the federal debt is now running at kind of a $1.2 trillion annualized rate. And we just recorded a federal deficit of 1.8 trillion. So big piece of that deficit's the interest. And if we can get the interest cost down, then the deficit will decrease. Now, the flip of that, though, is that taking the interest costs down, the only way to do that is to probably end up growing the Fed balance sheet, because when the rates go down, the bond market's going to revolt. And it's interesting, we even got another little clue on that yesterday when Powell said, that maybe the runoff of the Fed balance sheet, maybe it was time for that to end. And they'd already taken it down a lot. They'd taken it from, I think, 25 or 30 on the Treasury side down to 5, and they kept buying the MBSs. I think it's close to 30. But, there's signs, all the monetary plumbers, the smart people on Twitter who follow this stuff are saying there are a lot of signs indicating that they're running out of space, fiscal or balance sheet space, and that they're ultimately going to have to print. So I think, the big print to me feels kind of imminent. Hasn't really entirely happened yet, although there have been some signs of it. I mean, another thing that happened is Besant has been buying long treasuries. He's been issuing a lot of short-term treasury bills, and then he uses those proceeds to buy the long term. Well, that's kind of shadow QE or Operation Twist, whatever you want to call it. In fact, I tweeted this morning, there's another chart out that just showed that, actually the Fed has increased, even though their balance sheet has been shrinking on net. They've been shrinking the shorter piece, and they've increased their holdings of the longer piece. Again, all in an effort to keep long-term interest rates down, to keep inflation expectations contained. And my view is we've probably seen the bottom of this inflation cycle. In other words, COVID took us to 9, Powell tightened, we came back down to 2.9. I'll bet 2.9 is probably the low print, and that as soon as this accommodation starts, which could be as soon as this fall if something breaks, or it will certainly occur in May of next year, we're gonna enter another inflationary cycle. So that's kind of a long-winded big picture, but that kind of brings us up to where we are right now. And I know one of the things that's going on is a lot of Bitcoin maxis are like, hey, what the fuck? Gold and silver are really working. How come my thing's not moving yet? And I've got a great chart on that topic that just shows that basically Bitcoin has a lag to gold. Gold smells it first, and then Bitcoin moves harder. So that's coming.
Wow, what a great frame up to the conversation. Let's stay on the Bitcoin topic real quick, because, okay, so the debasement trade, now you're saying like all of these Wall Street shops are now coming out and they're giving a name to something that you and many other folks who might not be on CNBC all the time have been talking about. And so it's like, okay, now it's going to be like the magazine cover story or whatnot. But I saw some headlines, and I want you to rebut these, saying that, because Bitcoin has sold off or has had like a crypto crash, that it kind of refutes the debasement trade, if you will.
Yeah, I mean, it hasn't sold off that much. I mean, if you look at Bitcoin on a year-over-year basis, I think we're still up over 70 or 80%. I mean, that's pretty damn good. This last quarter, I think it was kind of flat compared to gold, because gold took off, and both they trade together. They both represent sound money, and Bitcoin has traded much better than gold historically in terms of the amount that it moves, but they tend to trade together. And the thing that I think a lot of people are having a difficulty with, Julia, is that they're doing this price bias thing. And, in a lot of assets, this does make sense. You say, well, good God, the thing's gone up a lot in price. Surely it's going to correct, or surely it's overvalued now and will come back down. And that's not, generally speaking, there is some reversion to the mean on lots of financial assets when they get ahead of themselves. And there could be a little bit of that here. But I think more importantly, what's really going on is this is a secular change in people's understanding of the world. And, people are waking up to the fact that, nothing will stop the fiscal train, as Lynn said.
Mm-hmm. So, nothing stops this train. Yep.
Yeah. And as they wake up to that, they think to themselves, well, shoot, I've got to protect myself. And, yes, some of us have, and some of us have been loud about it, but frankly, we're a minority. I was just writing my quarterly, some interesting statistics. U.S. total stock market cap is about $66 trillion, according to ChatGPT. The total value of all the publicly traded gold and silver miners in the world is 800 billion. So it's not even 1 billion, and we've got $66 billion market cap. I mean, hell, I think Nvidia has almost a $3 or $4 trillion market cap. $3 trillion market cap. So my point is that everybody's on the AI stock market side of the boat, and they're not really, and they think that Powell was going to be able to bring inflation back under control. And I think that's the illusion that's being shattered. And as that illusion gets shattered, what I think happens is, kind of what we all in the monetary debasement trade call Gresham's law. And people say, well, okay, this money is fine. I'm making money, but how should I store it? And if they're in something that's melting, which is the dollar, they need to get into something that's not going to melt because they can't print them. And that's Bitcoin and gold and silver are the three alternatives. So, by the way, I'll just add parenthetically, I mean, the silver move was really exciting to me, and I'll tell you why. In precious metals bull markets, you don't really have a bull going on until the silver price starts to move. It comes later and moves faster. And the silver market's a dinky little market compared to the gold market. But when it moves, it really moves hard. And so, silver went from 35 to 52. I mean, it's up, almost 100%, not quite. And my sense is it's going to 60, 70, 80, 90, 100, not that far out. I mean, based on a lot of things like the silver to gold ratio and other ways of looking at it. And so, that to me, what that says is that we are really in the heart of this trade. And, people who say, well, yes, it's gone up a lot, therefore I'm too late. Well, yes and no. It would have been better to buy it a year ago, no doubt on all of these things. But in baseball terms, my partner and I, we talk about it. We kind of think, well, this is probably the fourth inning, the third inning. And let's be realistic. I mean, there will come a time when these things do get ahead of themselves. They do get overvalued. And there's something that blows up this trade, that makes this trade not work. And whenever I describe this, when people come into my fund, I say, they say, well, if they're smart, they ask me, how could I lose money here, Larry? How does this not work? And there are a lot of ways. But one of the things I always say is, if the government gets responsible and starts to balance its books, and we stop printing money to pay for the deficits, well, that's going to make this trade not work. And of course, they laugh, and I laugh, and you laugh, and we all know, because we don't see any signs the government's getting responsible, right? The big, beautiful bill. I mean, the government got a little bit responsible by putting in, tariffs. And DOGE tried to cut expenses. They probably, at the end of the day, only cut 50 or 100 billion. And the tariffs helped to probably bring in an extra 200 billion a year. But then the big, beautiful bill is estimated to be between 3 and 5 trillion over a 10-year window, some of that back end loaded. And so, basically, there's we spent everything we're making on the tariffs and DOGE, we're spending on the big, beautiful bill. And we just got the deficit. It was interesting. Deficit for September fiscal year end of the government was just reported as 1.8 trillion, same as last year. But if you read between the lines, they actually changed the way they accounted for certain things. And had they done it the old way, it would have been 2.1. So, this is another,
the deficit would have been even bigger.
It would have been bigger. So this is kind of like the inflation numbers or the BLS numbers. Do you know what I mean? And by the way, I mean, that's another thing, right? I mean, just to add fuel to the fire, right? So you're a foreign bondholder, you're thinking of investing in the US, and, you got a president who, and look, there's a lot of things I support this president on, there's some things I don't, but you got a president who basically said, the BLS revised all the numbers, right? And we all remember that. And part that's what caused Powell to pivot, but huge revisions, indicating that, they had been doctored for political reasons beforehand. And of course, then what Trump did was he fired the woman who was running the BLS, right? But, you're a foreign creditor, you're looking at investing in the United States, you got the president firing the guy who's keeping the numbers because the numbers aren't what the president wants to see. I mean, does that really inspire confidence in the fact that you're getting honest numbers out of the company or out of the country? I mean, so it's that kind of thing that just, the U.S. sadly is kind of behaving like an irresponsible emerging market. And historically, when we've seen countries behave that way, it leads to a lot of inflation. Oh, I missed another one that happened recently too. It's a big one. There's so much going on. We sent $20 billion to Argentina, right? Why not? Argentina's blowing up. We want them in our camp, not China's camp. So they need to defend the peso. Great. We've got $20 billion for that. Where's that coming from? We're going to print it. So, there's just these kinds of things, one after another, are the reason why I believe you're seeing just this relentless bid in alternative forms of money, silver and gold. And that bid is coming for Bitcoin. But as I say, and I've got a chart on this, there's generally a lag that shows the difference. This was done by my partner, David Foley. It's a brilliant chart. So this goes from 2018 to end of 2020. Well, no, it actually not current. So interestingly enough, you'll see at the right-hand side that, so the yellow line is the price of gold, and the orange line is the price of Bitcoin. And please note that the scales are very, very different. In other words, the Bitcoin scale is much larger than the gold scale. And Bitcoin's crushed gold, but in terms of general areas of movement, they've gone in the same direction. And if you look over here more recently, what you see on this chart, the price of gold is 3,400. Well, that's because we did this in August. And now it's up off the end of the chart. It's at 42. And the price of Bitcoin here was, I think, almost 120. And it's actually that the Bitcoin line is now, it's about where it was. Yeah, 110. Okay, which is about where Bitcoin is right now. But here's the thing that's interesting. Let's go back to the beginning. So 2018, right? You've got these two lines kind of tracking together, not much going on. And then, the repo blowout and Powell pivot and a lot of other things in 2019, even before COVID, forced gold to start moving, and Bitcoin was just dead, just sat there, right? And then, late 2019, more gold movement again. Bitcoin's just dead. And, then COVID erupts and they both go down sharply. Gold actually even more sharply than Bitcoin, but they both go down sharply in March of 2020. And then gold takes off pretty substantially because everyone's like, okay, this is a big print. And it was the second big print after the 2008 version. But notice how Bitcoin was just kind of flat, right? Just didn't do much at all. It was kind of stuck in this $10,000 range. And then suddenly it woke up and it went to 60,000. So, gold, it was nice. Gold had gone from 2,000, gold had gone from, call it 1,500 to 2,000. It's a nice move. Don't get me wrong. But Bitcoin went up 6x, okay? And then Powell, then FTX blows up, so Bitcoin corrects a bit, back down in line with the gold thing, then it goes up again. Then Powell starts tightening in early 2022, and Bitcoin, because it's more sensitive to liquidity, goes down much harder than gold, but gold goes down. But then notice again, gold starts to turn up, there's a little lag, and then Bitcoin kind of follows. And it's not a perfect correlation, but the point is that often gold, like here's an example, Bitcoin was trending down in 2024 all through the year, and yet gold was trending up. And then gold broke out, and then Bitcoin waited a while, and then boom, it went even harder, right? So it's interesting to me this is taking place because I can guess, or I can see what I believe is the next move, which is Bitcoin's about to go to 250. So it's so those Bitcoin bulls who are frustrated and looking at the gold people thinking, oh man, I wish I were over there. And it's funny. I've had some Bitcoiners say,
and you can be both too. You can have Bitcoin exactly and gold. Right. Sometimes it feels like they're like at each other. Yeah,
that's the whole point. They shouldn't be fighting. We're all on the same team, which is sound money. There's a role for both. If you don't like the volatility and you don't want as much upside, fine, gold works. It'll protect you to some degree, but Bitcoin's going to crush it in terms of overall performance as it has in the past. So anyway, that's kind of what I see out there, and it's very interesting times. I mean, we're gonna see if Jerome Powell makes it to the end of his term without having to do another pivot. He indicated yesterday he's probably going to cut another 25 bips again, which suggests to me that they can see that things are in trouble in the economy and otherwise. And with inflation at 2.9% headline and realistically a lot higher than that if you counted it honestly. I mean, I know everyone goes to the grocery store and we all know that we're not at 2.9%. So, it's going to be very interesting to watch this unfold over the next, 6 months.
Gold keeps setting new all-time highs, but price appreciation isn't the only way to profit from owning gold. Monetary Metals is redefining the future of precious metals investing. Instead of paying to store gold, Imagine getting paid to own it. With monetary metals, you can earn up to 4% on your gold, paid in physical gold. That's right, your ounces grow each month, not just your paper balance. A yield on gold, paid in gold, means you're stacking more ounces every single month. And you still benefit if gold's prices rise. You're earning more gold every month and enjoying potential price appreciation at the same time. Go to monetary-metals.com/Julia to learn more and see how you can start earning 4% on your gold, paid in gold. Let me ask you about just maybe asset prices more broadly. Let's talk about the equity markets, stocks near all-time highs. I think last time you and I talked about like an everything bubble. We've had other guests who've talked about this everything bubble. Cheap money has kind of fueled this everything bubble. I want to get your latest on that, where you think we are in that scenario, and presumably it's going to burst, right? I take it that would be the thesis.
I mean, this is an area where I've been dead ass wrong. I mean, if you look at, I really blown the call in the stock market because I've been a bear on the stock market for a bunch of years here, and I've been just wrong. It just keeps relentless.
Do you just stay out of it at that point then? Or?
Well, yeah. I mean, I've been out of it in most, except for gold and silver mining stocks. I've been out of it for quite some time, but I was even buying puts and on it and stuff. I've lost a lot of money shorting the market. It's stupid. But, it is what it is. I mean, it is, by any historical metric, this is indisputable. By any historical metric, it is very overvalued. And it is a function of, the everything bubble and the fact that they distorted the money supply with, ZERP and QE and everything else. But what I've learned the hard way and what I believe to be true is that these markets can be irrational and this kind of stuff can go on a lot longer than you realize. And arguably, even in my last quarterly letter, and these are free on my website, by the way, these quarterly letters. In our last quarterly letter, we described something called the crack up boom, which is to say, people just buy everything because it's going up, and they borrow to do so because they know they're going to pay back in depreciated currency. And so, what happens to the stock market? I don't know. I really don't. I'm not smart enough to figure it out. It could continue to go up along with gold, silver, and Bitcoin. It could contract severely. I think if it contracts severely, that would be pretty negative for the overall economy and for spending and for deficits. I mean, it would mean lower tax revenue for the government, and the deficit would blow out. And so if all of that happens, my suspicion is that the policy response to all of that is to print more money, I mean, we know what happened when the dot-com bubble burst in 2000. Ben Bernanke took interest rates to 1%. And, Greenspan and he were out talking about, take out a HELOC, borrow against your house, and that created the housing bubble. And so, this is no way to run a railroad, but what they tend to do is when the economy slows down, if the employment mandate becomes more important to them than the inflation mandate, they're going to cut rates severely. And that's fine. I mean, it won't necessarily work, but it will allow a lot of people to refi. It'll inject more money into the economy. But that in turn will also create inflation. And so, we're in kind of that worst of all worlds, which is, the 70s where we had stagflation. And I've been saying for quite some time that I think this decade, and this is a mistake I think a lot of investors are looking at, I think this decade is going to be like the 70s on steroids. And so, if you look at the 70s carefully, what you see is stock market wasn't a terrible place to be. There was one big correction in 72.34, went down 30 or 40%. But in general, stocks kind of stumbled along sideways to trending up. But by comparison, sound money things in an inflationary world, which we had, sound money stuff went up incredibly quickly. I mean, gold and silver and oil were the three best performing, and then the stocks that produced those things, they were the three best performing categories throughout the 1970s. And it was discovering that actually led me into this gold and silver fund that I now manage. I think a lot of people, and this is where I wrote the book too for this reason, I think a lot of people sadly have, they're looking at short-term stuff and they're making their investment decisions. And, arguably since 1980 and certainly since 2008, stock market investors have been trained to buy the dip. It's just buy the dip and it'll always come back. I mean, I go to my gym and I work out with a lot of guys my age, a lot of them very wealthy, and they have advisors, and all their advisors say, yeah, when every time the stock market goes down, it's an opportunity to buy more. And they do. And you know what? It's worked for them. And I get it. And if conditions stay the same, then it might continue to work. But what I would argue is there's some chance that conditions have changed and they will not stay the same. and that, this inflation thing is real and persistent and going to get worse. And if that's the case, eventually that buy the dip strategy will stop working. We won't be in that strategy worked because we were generally in a deflationary world and deflationary trend. We still are. Technology and AI bring deflation. But in turn, we've got a credit structure and a government system that absolutely requires inflation to function. And so, if we don't keep things growing credit-wise, it's going to look like the 1930s. And, Ben Bernanke in his famous speech explained that to us, that they've got a technology called a printing press and they can solve that. So
hence the big print that would be coming.
So they're going to try and solve it. Yeah. And that's my sense. I mean, it's, all this is dreadfully wrong, and it's no way to run a railroad. And my book talks about that. And I have a chapter on policy response. I even have I have the speech the president should give.
Yeah, I think chapter 22, you have the speech.
Yeah, here's the speech. Here's what the president should come out and say. Look, guys, we've been following the wrong model. We got to change it. If we do this, and it's not. Look, it's not all doom and gloom. I've been accused of being a doom merchant. I'm not a doom merchant. I'm just an analyst of the facts. And the facts suggest that when you're in this kind of a situation, like other emerging countries have been, there's the way to resolve it. The only way to really resolve it is through inflation. And whether it's very high inflation or, medium inflation over a long period of time or whatever, we've got to inflate. I mean, we did it after World War II. We had the same debt to GDP after World War II, and we inflated and grew our way out of it. And, maybe that's what happens this time, or maybe there's a monetary reset, or heaven forbid, maybe, my tail case, we just go straight to hyperinflation. I mean, if Blue Team wins in 2028, and Stephanie Kelton becomes Treasury Secretary, and Andrew Yang is president or vice president, and they put in UBI, and we start handing out goodies to everybody and printing money like crazy, the dollar will completely fail. And are those things going to happen? I don't know. I mean, I think it's a possibility, because the politicians, and they test ran it, by the way. They test ran it through COVID. I mean, they now know how to wire money directly to your bank account. The PPP gave money to businesses. I mean, it's if they choose that response again, we're going to get very, very high inflation. So we'll just have to see. I mean, the hardest part to do, the hardest thing to predict as an investor is what the policymakers and the people that are running this stupid system are going to do. But what we do know is, and we can lean on the math and the trends, which suggests that no matter what they do, it's highly likely to be inflationary. And so in light of that, I know historically that the right way to protect yourself from inflation is to own real assets that have limited supply. So
that they can't print.
Yeah, that they can't print. Right.
So is the base case for you in the thesis, it's a stagflationary environment, as you mentioned, like 1970s on steroids?
Yeah.
Yeah,
we have
a lot of boomers who watch, so they'll remember Gen X as well. Most of my audience is Gen X and boomer. So
it was awful. Yeah, it was just awful.
I've heard about the gas lines.
Oh, there were gas lines. I mean,
your license tag, like
even odds or something. All that stuff.
But on steroids,
the numbers were all different. I mean, the gasoline was 25 cents a gallon. But it was. I mean, I remember it quite clearly. In the late 70s, everybody thought, we'll never solve inflation. I mean, it's going to be here forever. And Paul Volcker, put the kibosh to that idea. He had to take rates to 20%, which almost bankrupted my father. But and that's, by the way, that's the whole notion that's just broken here. The notion that the Federal Reserve should be setting the interest rate, which is the price of money, the interest rate. It's like a bunch of policymakers setting a price that should be determined by the free market, right? The interest rate should be set at the balance between savings and investment, and should be set by the free market. And so, these bananas at the Federal Reserve. I mean, they've basically they've had rates as low as zero, which is just ridiculous. It's a tautology. I mean, if money pays zero yield, it has zero value. And they've had them as high as 20%, which nearly bankrupted my father. I mean, when Volcker did that, some farmer drove his tractor to Washington, D.C. with a shotgun and tried to walk inside the Federal Reserve to kill Volcker. I mean, it was pretty rough times. And, and it's all just because they're running the system that benefits them at the expense of the rest of us. And I lay that out chapter and verse in the book.
Yeah, I will read it. You said, At its core, our monetary system is broken because the price of money is set by a banking cartel, the Federal Reserve. Think about it. 12 voting members of the Federal Reserve Board decide periodically what the price of capital, interest rate, should be. 12 humans in a country of more than 330 million Americans have immense influence over financial markets. Our founding fathers would be appalled.
Yep, I couldn't say it better. That's a great quote. I'm glad you pulled that out because
that was yours.
I didn't have it at the top of my head, but that's right. I mean, it's nuts. It's absolutely nuts. And that's why, so you get the people on the left who are arguing about billionaires and wealth inequality and all that stuff. And I'm very sympathetic to that because some of that money that those billionaires have gotten is very much ill-gained. I mean, some of it's not. Some people have really added value and built great businesses, but some of them, they've just gotten it through financial engineering. And you and I, if we want to borrow money, we've got to go to a credit card company and pay 25%. Or maybe if we're credit worthy, we can buy a house and now you pay 7% for that. That's really the only leverage the average human can get. But if you're on Wall Street, you could borrow at the Fed funds rate. When the Fed fund rate was 0, you could borrow at 50 bips and you could turn around and use that to, place a carry trade where you'd earn 10%. I mean, it was a one-way ticket to becoming silly wealthy. And, and it was even worse than that because they benefited insiders in the whole game. I mean, in 2008, it's one of the anecdotes in my book I really like. And I wrote the book in part to remind a lot of young people who probably weren't there when it happened, some of the shit that went down. I mean, this is an amazing story, right? So in 2008, they were so desperate to get people to buy assets that they went to the head of Morgan Stanley and they had his wife set up a special purpose vehicle to buy distressed assets. And they loaned her, somewhere between $100 and $200 million, non-recourse. Okay, non-recourse, which means that if she lost the money, she didn't have to pay it back. And she put up a couple $1 million on the basis, to underneath it. And then she went and bought assets with that. I mean, this is the wife of the chairman of an investment bank borrowing from the Federal Reserve hundreds of millions of dollars at an incredibly low rate. I mean, how is that not just a gross abuse of power, crony capitalism, et cetera? And no doubt all those things worked out for her, and she became very wealthy as a result of that. He and her, they became very wealthy as a result of that trade. And I'm not just making this up. I mean, this is well documented.
You can go read. There's a piece on it too. Like I'm just looking at Matt Taibbi in the Rolling Stone. I remember when he used to write for Rolling Stone.
Google Matt Taibbi. Yeah. Matt Taibbi, Rolling Stone, The Real Housewives of Wall Street.
Yeah, and it was from the Federal Reserve Term Asset-Backed Securities Loan Facility, TALF. You do cover it in your book. Yeah.
Isn't that amazing? Yeah. So, I mean, come on, guys. I mean, this is a fair system. The blue collar worker, did he get to borrow money from the Fed at a low rate with non-recourse? I don't think so. I mean, we should be marching in the streets with torches and pitchforks. We really should. I mean, it's disgusting.
Yeah, I think a lot of people like intuit it. They sense it, but I got to say, one of the things I really enjoyed about your book is the narrative in it. And I feel like you also got a lot of financial history, and also you reference so many other great folks in there too. So it makes her like, okay, well, I want to go read Luke Groman's Forest for the Trees, or now I want to go read Lynn Alden's book.
And you should get them on your programs. I mean, you got to get Safe.
Yeah, we had Luke on recently. Yeah.
Yeah, I mean, look, I'm the first to say that book is not original in many respects. I mean, there are great ideas in there. I mean, Safe got me going on Bitcoin with his book, The Bitcoin Standard. Lynn's book is outstanding. Luke is a great macro analyst. I mean, all these people, what I think I've done though, and I will take credit for this because I think I'm pretty good at it, is I kind of pulled it all together in a way that the average person could read and understand. Because I've given those books to average people. A lot of times they bog down. They're kind of like, I don't get this. I don't, where are they going here? And I tried to make it explainable. And the way I did that, actually, Julia, you'll appreciate this, is, my wife, who's a writer and is very non-financial, and she was my test case. I just said, hey, read this, and do you understand this? And, it was pretty funny. We got started, and she's like, hang on a second, what's the Federal Reserve? And I was kind of like, oh, yeah, I get it. The average person doesn't know what the Federal Reserve is, so I better explain it, right?
Yeah. And you know what? And like some of us, it was like I don't know if we don't know the right question to ask, or we're embarrassed or afraid to ask, but it's what's amazing about the book is it's literally for anyone.
Absolutely. Well, and by the way, that not knowing what to ask, and they're making it confusing, that's all very, very intentional. Do you know what I mean? On the part of the people. I mean, this system benefits a certain set of people. And, they're like the overlords, and they're like, oh, okay, all you peons, serfs, you don't need to understand this stuff. Leave it to us. We're financial professionals. We've set this system up, and, we know what we're doing and you don't. And it's really condescending. I mean, the notion that they have some superior knowledge and that they deserve to sit at the top of this pyramid.
Yeah. One of I mentioned this the last time you were on the show, but I love the opening of the book where you're at HBS, yeah. Geithner speaking. You went to HBS. You're in a room with a bunch of other folks, and you were the one who called him out on it. No one else. Yeah, no one else said anything.
I got to tell you, I had butterflies in my stomach, and I was definitely the turd in the punch bowl. And I was very much conflicted with my mother's view that, if you don't have something nice to say about somebody, don't say anything at all. But on the other hand, I just felt like I just couldn't resist it. And the reason I couldn't resist it, Julia, is they were up there kind of bragging and crowing about how what they did in 2008 was righteous and genius.
Victory lap,
and,
yeah.
Yeah, just a fabulous thing, without really examining the underlying premise that 2008 should never have occurred if they didn't have a corrupt system, and that all they did was bail out their friends. I mean, if they had really let capitalism prevail, all those people would have been bankrupt. I mean, Twitter is a really interesting thing, and it's a great leveler. And Lloyd Blankfein, who ran Goldman Sachs throughout that whole thing, and Goldman Sachs was infinitely bankrupt. I mean, if they hadn't had the insurance from AIG and then they hadn't had the bailout, I mean, they would have been completely bankrupt. And of course, Lloyd got bailed out, and Goldman went on to become worth a lot. And Lloyd made hundreds of millions of dollars. He's probably a billionaire today. I know for a fact he bought a $60 million house on Long Island. And and he used to get on Twitter and hold forth on all these subjects. And every time he would do that, I would reply to him and say, hey, dude, shut the fuck up. You were bankrupt in 2008 and we bailed your ass out. We don't care what you have to say. And I literally followed his account, and I did that on every single tweet he made. And eventually he just stopped tweeting because I thought he deserved it. Do you know what I mean? I mean, it's like, come on. You get to hold forth on what the policy of this country should be when you corruptly made, hundreds of millions of dollars because the taxpayers bailed you out. No fucking way. Shut up. Just shut up. So anyway.
You also point out too in the book, I want to say you were short during that time, and they changed the rules of the game.
Oh, yeah. 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 No, I come at this honestly, and I suffered, But that happened to a lot of people. I mean, a lot of people, they sold them these mortgages on subprime on these houses, and they inflated the housing prices. They were telling everybody housing prices would never go down. And so, people were taking out second mortgages. I mean, The Big Short and the stripper who had 6 houses and all that stuff. And, and then they rug pulled it. And all these people, I mean, it happened to my sister, and she wasn't gambling or anything else. She just needed to sell a house after the housing prices had collapsed. And she basically lost her house to the bank. And so, this was, it's the rules change, the rules for the banks and the elites and the people who are financial operators. That's one set of rules. And that's why they're billionaires and very, very wealthy in many cases. And then there's the rule for the rest of us, which is, tough shit. There's one of my favorite memes in there was the picture of the garage door from an Iraqi vet who had spray painted on his garage door 3 tours in Iraq, or foreclosed 3 tours in Iraq, but no bailout for people like me. And I thought, that's right.
Yeah.
The guy served our country for 3 tours and lost his house. I mean, it's sad shit. It really is sad shit.
It really is. Let me ask you, this is just came to mind more about the dynamics of the market today. Short selling, for example. I had this conversation with Tommy Thornton.
And he's great.
He's amazing. I love him.
Yeah.
And he was saying that if you look at the basket of the Goldman Sachs hedge fund shorts, it's up 38% because I guess shorts have gotten squeezed out of the market. And what I understand from my conversations, short sellers actually play a really important role in the ecosystem of our markets. I know people get a little upset in the comment section. Oh, they're just jealous because they're shorting and they're losing money. But when you do have a big correction or sell-off, those are the natural buyers.
Right.
Do you think I don't know where I'm going with this exactly, but is that a risk of not having the shorts there anymore? Or I don't know if
possibly.
They're
I mean, yeah, possibly. I mean, it's yes, it is actually a risk. I mean, the markets have become kind of Franken markets. I mean, you've got, Mike Green's point is that you've got kind of this passive
the
bid.
passive bid, yes.
It's just
Mike Green, yeah.
Yeah, it's just always there. And, the markets have become fairly reasonably detached from the underlying fundamentals. If you look at any of John Hussman's work, or if you look at the Buffett indicator of the size of the market compared to GDP, I mean, we're by most valuation metrics, we're at record levels. I mean, if you look at Jeremy Grantham, who's, Grantham Mayo van Otterloo, very brilliant investor, called the last 2 or 3 bubbles, and he's convinced this is one as well. But even he will say he just doesn't know if and when it's going to burst. And it doesn't necessarily have to burst in nominal terms, because, if we have a very, very severe inflation, I mean, remember, owning a stock is owning a claim on the profits of a business. Mm-hmm. And the business isn't going to go away, presumably, no matter what happens, if it's a good business. And the profits, if the currency changes, the profits will reprice into the new currency. So there's an argument for owning stocks even in a currency event. I mean, I think in Weimar, the people who owned German stocks pre-Weimar, if you own stock in Mercedes-Benz, it was impossible to find the data because it happened in the early 1920s. But, what I've heard, what I read was that, you still owned the shares of Mercedes-Benz, and there was probably a time frame when your investment was down a lot or nobody would buy your shares. But they reset the currency. They got back on a gold standard. The country grew again. And I'm guessing that your shares of Mercedes would have held on to their value because it was still a company that was operating. Whereas if you'd owned German bonds or German currency, you got totally wiped out.
Yeah, inflation benefits those asset holders.
Yeah, so it is an asset. And we all know that in big cases of hyperinflation, and the famous charts are Zimbabwe, Venezuela, and Weimar, stock markets went crazy. They went straight up. They had crack up booms. Now, if you measured that value in currency, local currency terms, or not, if you deducted out the currency effect and compared it to gold, you really didn't make any money. But you actually did kind of hold some of your purchasing power because they did nominally go up. So it's tricky. Stocks are tricky in a currency event. Bonds are death in a currency event. And, in my view, obviously, I've said it earlier, the best things in a currency event are currencies that can't be printed.
Mm-hmm.
So,
yep. Yeah. This is just more of a side comment, but I loved this quote you had in your book around inflation from Daniel Webster around inflation is the surest way to fertilize the rich man's field with the sweat of the poor man's brow. Like, I feel like that's a quote that stands the test
Isn't it
of time.
Something? I mean, it's not like, it's like everyone thinks, Julia, it's like we're reinventing the wheel here. I mean, this is a tale as old as time. And as I think Luke Groman has said it best, I mean, to understand investing in today's world, the best thing to read aren't financial reports today. It's to read history books, because we're in a sovereign debt crisis, and the last sovereign debt crisis occurred around basically World War I kicked off the last sovereign debt crisis, and you had hyperinflation in Poland and Germany and Russia and a lot of places, and you had severe inflation in France. You had Britain went off the gold standard. The United States had a doubling of its price structure. Its CPI went up 100% in that time frame. I mean, that was the first. Well, there've been many big prints, but probably the first one was the War of 1812. But skipping those, Civil War, there was a big print, which was the greenback. But the first modern U.S. big print was when World War I broke out, and they were pushing Liberty bonds, and they couldn't figure out how to sell them, and so they did a really neat trick, and I describe it in the book. They went to the banks and they said, "Hey, bank, you buy this Liberty bond, and we'll loan you the money to buy it at 3%. And then they paid 3.5% on the Liberty bond. And so the bank made 50 basis points.
Oh, they're arbitraging it. Yeah.
No risk. So the bank, basically they subsidized the banks, and the bank created the credit, which is how all money does get created ex nihilo from the bank. It's a bookkeeping entry. And, more or less, they doubled the money supply from 16 to 20. And in that same time frame, prices doubled. And, you had the Chicago Black Sox in 1919. You had Ponzi in 1919. You had, a huge racial attack in Kansas in the same time frame. You had an enormous increase in lynchings. You had enormous labor strife, huge strikes all over the country. When you have massive inflation, it tears at the social fabric of a country. It just does. Mm-hmm. And, the 70s were a very turbulent decade. Same story. And, and sadly, we're in my view, we're in a decade that's going to have massive inflation. And some call me a doomster for saying that. And I say, no, it's just an analysis of what's happened historically. When you do these, if you take these following steps, you get this following outcome. And that's not doom, that's analysis.
Yeah. All roads lead to inflation.
And I would say, and by the way, I also want to say, for those who say I'm negative, is, we're going to fix this, Julia. This is going to get fixed at some point in time. And we're going to get back to a sound money standard. And there's so many great things happening, both in technology and AI and everything else. The world's going to be a great place, but not until we've solved this problem.
That's why we're in the fourth turning, though.
Exactly.
And it's that fourth turning from the monetary perspective.
Exactly.
We talk about, we've had Neil Howe on the show. Yeah.
That's exactly what this is about. We have a monetary fourth turning.
And we will enter that first turning with new systems. And that's the springtime.
And sound money. Yeah. And I mean, it's going to be fabulous. In fact, I'll lay out, I think you might enjoy this. I'll lay out a model that I gave. I was just at an event up in New Hampshire, a really fun event with a bunch of Bitcoiners. And they said, Larry, lay out your model for the next, the next 10 years. I mean, how's this going to unfold? I mean, we're in one hell of a mess, and where are we going here? And I'll just lay out what I'd said, because I think it's an interesting thought. And this probably won't happen this way, not even close, but this is my opinion. So the next 3 years will be very highly inflationary. It'll get worse. They'll have to print more. The Federal Reserve will fail. And, there's going to be a lot of strife as a result of that inflation. Maybe the stock market collapses with print to address that, et cetera. I don't know about that part, but there'll be inflation. It'll be bad, really bad. And in 2028, rather sadly, red team will lose, because blue team will come along and promise all kinds of goodies and stimmies and, taxing the billionaires and, and half the country will buy it, sadly. And so blue team will come in and they will finish off the dollar. They will do UBI. They will do yield curve control. They will keep interest rates artificially low. They'll have Stephanie Kelton as the Treasury Secretary, and, the woman who thinks that deficits and printing money doesn't matter.
Modern monetary theory.
Modern monetary theory. Yep. And they will literally kill the dollar. It will, and by the end of that time frame, so they get in 2028, and by 2032, which actually happens to kind of coincide with about the general length of a fourth turning, we will be kind of a failed country experiencing super high rates of inflation, arguably hyperinflation. Gold will be 10 to 100,000. Bitcoin will be, 1 to 10 million. And, it'll be bad for many people. At that point in time, Michael Saylor will be the richest man in the world at that point in time. At that point in time, Michael Saylor will step forward. He'll be, He'll be 68, about my age now. He's 60 now. And he said he's going to give all his Bitcoin. He's just going to let the keys expire. And he's not in this. He's in this to be a historical figure, in my view. And I know him not really well, but I know him enough to, I think, get where he's going. And he's going to step forward. He's going to be a modern day Thomas Jefferson. And he's going to say, guys, here's how we went wrong. Here's the history of it. He's going to have all the receipts. He's going to walk through the history. And he's going to say, we need to return to a sound money standard. And we need to do a massive reform of the Constitution. We need to have term limits. We need to have a balanced budget amendment. We need, and there'll be 10 other things that'll come along. And he's going to go to China, Russia, the rest of the world, and say we need to make peace and we need to totally denuclearize. He's going to go to the United States and say we need to do a Marshall Plan for nuclear power to keep energy costs low, because that's what creates wealth in a society. And he's going to have this whole plan laid out in 2032. He's going to win. And when he wins,
what do you mean? What, you think he's going to run for president?
He's going to run for president and win. Yeah.
Interesting.
He's going to, and Michael Saylor is going to save America. That's my vision of what's going to happen here. In 2032,
have you talked to Michael about this?
I have not, actually. I haven't had a time to sit with him personally and talk with him about it. He might say I'm full of shit. I don't know. I can't say that he's endorsed this in any way, shape, or form. And I'm only doing this based on kind of my reading of who he is and what the situation will call for. But the timing will be perfect. He'll be the right age. He's still young enough to do it. He'll bring in a lot of Bitcoiners around him to help him. I hope I'm one of them. And he's going to completely reset the system. And the fourth turning will be over. We'll be on a sound money standard. And we will rebuild America and the world on sound money. And Keynes,
why
Keynes will
Bitcoin,
be a
not
distant
gold?
memory. What's that?
Why Bitcoin and not gold?
Because it's better, Julia. It's just much better. Gold has got lots and lots of flaws. It's hard to move, hard to verify, hard to store. I mean, we live in a digital age, and it's an antique. I mean, it's a form of sound money, and it's not going to disappear tomorrow, but it's going to be demonetized in Bitcoin terms very severely over time, very much the way silver has been demonetized in gold terms. And so, the same thing will happen with gold. And by the way, that'll also advantage America versus the countries that bet on gold. I mean, China and India, for example, have made the wrong bet on gold, just like they did with silver back in the 18th century or 19th century, late 19th century. And so, America is a technology leader. We're a Bitcoin leader, and, that'll be a good thing. And by that point in time, it'll seem totally normal to own Bitcoin. Everyone will own some. And everyone will understand what it is. Right now, nobody gets it. I shouldn't say nobody, but the percentage of the population that gets it is relatively small, which is why I wrote my book. So, I mean, it's instant settlement, algorithmically sound, fixed in supply. Michael's right when he said to Laura Shin, he said, "Laura, it's going up forever, Laura." and he's right. He's absolutely right. And that the reason that he's right about that is that, there's a fixed supply of it. And so it really only can go up, forever in terms of things which are not fixed in supply. Or another way of saying it is the price of everything is going down forever in Bitcoin terms in a deflationary world.
I have a question. Fixed supply going up. Not everyone has Bitcoin right now. So could that set us up for a system that would also just be inherently have inequality? Because you're going to have people who are very, very rich already with Bitcoin if it becomes the new kind of monetary system. Not saying everything needs to be equal, but
what'll happen is those rich people will spend it and everybody else will get their share of it. And that's like saying, that gold is the form of money that rich people have now, and those people are going to be insanely wealthy. I mean, yes, there will be some transfer from those who own the wrong asset to those who own the right asset. I mean, that occurred in Weimar Germany. The people who had gold or farms, came out very well. The people who had bonds, they were wiped out. But if you take a look at what it means for the average person, it doesn't mean that much one way or the other. If you don't have a lot of assets, or your only asset is your house will hold its value in new terms because it's a place you can live. And, your mortgage will probably be easier to pay off because there'll been massive inflation. So, for the average person, say you're a plumber and your biggest asset's your house, you can still do plumbing services and you'll just get paid in Bitcoin on a go forward basis. And, suddenly you'll have something that you can save in that won't be debased. The government won't be stealing 8% from you every year, which is kind of what's happened, for 50 odd years since we went off the gold standard in 1971. I mean, the government, the inflation numbers are cooked, but, the M2 numbers are not. And you can see that the government has more or less stolen 7 or 8% from all of us every year for the past 50 odd years. And that will no longer happen. And that's the implications of that, it's really hard to see the implications of that, how good they are. I mean, the other related thing that's going to happen that's going to be very, very good is how's the government going to pay for a war? I mean, these governments, look, the average person, Julia, I mean, do you want to go kill people? I know I don't. Go ask 100 Americans who wants to go to some foreign country and kill people. I mean, only the psychopaths are going to say they want to, right? And so, war is just going to become a thing of the past because no government's going to be able to afford war. Which is not to say there won't be crime, and also not to say there won't be psychopaths. There still will. And, we'll need good government to enforce laws and order, so that we get, the criminals among us and prevent them from preying on the rest of us. But most of the world doesn't want to kill each other. And, and yet we've still got nuclear armed countries and, saber rattling amongst big powers. And I think that's all going to become, we're going to enter a new enlightened age. That's all going to become a thing of the past, in my view. People are going to look back at just how barbarian it all was. I mean, it'll be, our kids or grandkids will look back and it'll be like you and I today, like they bled George Washington, right? They thought, he was dying and they thought the right thing to do was to bleed him, that was a medical treatment at the time, right? And you and I look at that and say, God, that was fucking stupid, but they did it, right? And right now we're setting interest rates and, we feel like we got to have a big, strong defense and, we got to spend all this money on weapons and all that stuff. And people are going to look back and say, those people were primitive. They were archaic. I mean, we don't need to do that anymore. And
can we fix our debt situation though? Like I'm just looking right now, our debt, 37.6 trillion.
Well, yeah, we can fix it easily.
Debt.
Just it's worthless. It's denominated in dollars, and the dollars are worthless. Guess what? We're out of debt, right? I mean, that's how it happens. I mean, now, if you hold those bonds, obviously you're not going to be feeling great. But the underlying basis of a moral society is sound money. The book talked about that. I had a chapter on morality.
Mm-hmm. And Judy Shelton writes about that in her book too.
Exactly. Yeah. And Judy's great. I love her. She's fabulous. And she's proposed a gold-backed bond. And in fact, Trump even said to her that, that's something he might do on the 2026th anniversary of the United States.
Yeah, 250th. Right? The 250th is next year.
Yeah, right. And he even said maybe we'll do a gold-backed bond for that. I mean, look, it's a great idea. I mean, we also should do bit bonds. That's another great idea that Andrew Holmes has talked about. I mean, there are a lot of things we could do, but, we should be building a strategic Bitcoin reserve. But, but I'm a little mixed on some of that because, to be honest with you, I don't think these big central governments have been particularly responsible. And so I'm not sure I want to see them doing things that make them more powerful. I mean, I think part of the model that the world will operate under as we go forward and we evolve as human beings is a much more distributed system, where we don't have these big centralized pieces of power. I mean, the book talks about how, centralized power was great. And it got going because Ford invented the assembly line. And he realized that through using capital and a centralized system, you could be efficient. And that was great. And it created, the Industrial Revolution, put us all in automobiles, made the world what it is. And in my view, we hit peak centralization in the World War II. We got so powerful, so centralized that we figured out how to slaughter 50 million people in 6 years, right? I mean, wow, that centralization shit, that's really great, isn't it? We killed a lot of people. And to me, that was peak centralization. And ever since then, we've been coming down the other side of that slope. I think, the nuclear bomb scared everybody enough to realize that, oh my God, we were so centralized and so out of control that we could eliminate the entire planet. And that was mutual assured destruction. Then the Soviet Union fell, so hopefully that went away. But there's still a lot of nuclear armed powers. And basically, as we come down the other side of it, in the book, as the book talks about, the microprocessor saved us because, it allowed you and I to do what we're doing right now. I mean, we're in different parts of the country. We're talking live. We're communicating with thousands of people. And, you are the New York Times. I mean, in the past, I had to listen to what the New York Times told me was the truth, and it wasn't because, there were women and men in there that lied constantly. And so, so here we are. And so this decentralization is also what's going to save us. The internet is going to save us. Decentralized money, decentralized algorithmic money is going to save us. And technology is going to save us. And thank God. I mean, in my view, they're all kind of God-given because, that old system, I mean, we don't need to have another war where we slaughter, 40 or 50 million people. We just don't need to do it.
I could not agree more. Larry, it's been so great having you on. Before I let you go, let's leave this audience with some parting thoughts, anything that you want them to think about, I guess, recapping the conversation on you want to own those hard assets, sound money, still, in baseball terms, still early innings here for gold, silver, and Bitcoin. But anything that you want to leave this audience to think about? And anything you want to plug too? I know you said you have your quarterly, your book.
I plug the book. Obviously, I just think the best thing we can do is try to educate as many people as possible about what's coming, because I think there'll be a big difference between those who make the savings in sound money and those who don't. So the book is kind of a warning, and that's really all I would say. The only other thing I would add, if you enjoy this or you're interested in this commentary, I have a website. I run a fund that's a gold and silver mining stock fund. And I have a website. The name of the firm is Equity Management Associates. The website is ema2.com. And every quarter, my partner and I write a free quarterly update on macro and investing and so forth. And if you scroll down to the bottom of that page, you can actually sign up your email for that update. And we'll never spam you. It's just we only send the update out every quarter. And those are on historically going back, years and years. Our reports are there, and I'm actually writing one right now that'll probably be out in the next 3 or 4 days. I'll put it up on Twitter too, but that kind of talks about these things that we're just discussing. So, and all I would say is I think sound money is the most important issue of our age. And so I would just try and encourage everybody to become educated about sound money. And then as you do, to help your friends and neighbors become educated about sound money, because I think the people who are educated about it will be in a better position than those who are not. And I hate to see people suffer. And sadly, and this is where I am a bit of a doomster. I mean, this system is broken. There's going to be people are suffering now. I mean, the lower quartile is really suffering. The lower half is suffering. And sadly, there'll be some more of that until we fix it. But the good news is, if my vision of Michael Saylor as president in 32 is right, 32 is only 7 years away. So we don't have long to wait.
Lawrence Lepard, author of The Big Print. Thank you so much for being so generous with your time, all of your knowledge, your ideas, your wisdom,
thanks,
helping
Julie.
us all learn.
I really enjoyed it.
Appreciate you.
I hope it was
I
helpful.
did too. This was fun. This is our second time together, but I look forward to our next conversation. Really appreciate you.
Thanks, Julia.